Buckle your seatbelts because we're about to enter the third wave of this pandemic. What's up everybody, I am Jasprit Singh from theMinorityMindset.com and welcome to The Minority Mindset. This 2020 pandemic never stopped surprising us. We saw our first wave back in March when the goal was to flatten the curve. In the summertime, it was all about slowing the second wave. And now going into November and December, it's the third wave, which they say is worse than the other two. Whether you believe this pandemic is one big hoax or the worst thing since the Black Plague, we cannot ignore the cost and reality that this pandemic is having on our economy and our country. Right now, hospital systems are tied down because they're turning away profitable elective procedures to prepare for a surge of virus cases. Businesses are filing bankruptcy left and right, and millions of Americans are still out of a job because of this pandemic. And while the stock market has been booming, it's on choppy waters because let's face it, everyone is worried about more lockdowns in the United States. Even if we don't see another round of lockdowns, a third wave of this virus would be a punch to our gut because our economy is already hurting and it'd be like kicking us while we're down. Come on, Jasprit, anybody who believes what the media says about this virus is a fool. Look, if you don't want to believe this virus is real, that's your choice. But if your company goes bankrupt because of this pandemic, well, then you're out of a job. That's why in this video, I want to go over what's really going on in the economy and what you can do about it. That way you can take care of your finances during this third wave and potentially come out of this pandemic a financial winner. But before we get into that, I need you to do me a quick favor and smash that thumbs up button below. Subscribe to the Minority Mindset YouTube channel. That way you don't miss our new financial news and education videos every single week. And hit that little notification bell too, because if you don't, then YouTube doesn't actually let you know when our new financial news and education videos are released. Is it just me or does it feel like deja vu? Back in February, Europe was getting slammed by this virus and countries across Europe were shutting down and quarantining, and everybody in America thought, wow, that sucks, but that's not gonna happen in America. Next thing you know, comes March, the NBA shuts down, flights shut down, and then the entire country shut down. Things have recovered quite a bit since the peak, but here we are going into winter and Europe is bringing back their quarantines because their cases are skyrocketing and everybody's wondering what's going to happen in the United States. The United States is seeing more cases of this virus than ever before, with cases breaking record highs and hospitals preparing for the worst. Obviously, the most important thing here is your health. So take care of yourself, take care of your family, and take care of your community. But now let's talk about how you can take care of your finances during this pandemic and potentially come out of this pandemic a financial winner. This third wave that everyone's talking about is gonna take a toll on the economy, whether it's a real thing or not. The current presidential administration says that they're not gonna do any more lockdowns. If Joe Biden wins, we could see a very different kind of reaction. I mean, he has said that he'd be willing to do a lot more to enforce social distancing measures and more potential quarantines, so we don't know what that means. For us to see more lockdowns, we'd have to see hospitalization rates spike and we'd have to see death rates go way up. If that happens and hospitals cannot support all these people that are coming in, then yeah, we could see more lockdowns. This would destroy our economy because now we see a whole new wave of businesses shut down for good. If lockdowns don't happen and we keep seeing cases go up, then yeah, our economy is still gonna suffer, but it won't be as bad as if we see another round of lockdowns. Businesses that rely on your physical presence, so restaurants, airlines, hotels, stores, and gyms, they're barely staying alive right now. If I run a restaurant that seats 50 people and now because of this pandemic, the max number of people that I can have in my restaurant is 50, the maximum capacity and revenue that I can see in 2020 is just 50% of what my potential revenue was in 2019. If my potential maximum in 2020 is only 50% of what I could have done before, that makes it very hard for me to stay in business. That's why from an economic perspective, I can almost guarantee that we're gonna see more bankruptcies, more business failures, and more people out of a job. It's very important for you to have a savings cushion because the rest of 2020 and 2021 economically is one big question mark. Yeah, there are stimulus measures out there and there are probably more stimulus measures coming, but these stimulus measures and stimulus money cannot fix the economy. It's just a band-aid. Like I've said time and time again, free money is the most expensive kind of money there is. There's a cost to printing this money, and it's a cost that you, your kids, and your grandkids are going to be paying for years into the future. When the free money and the government programs end, that's when we're going to really put our economy to the test, because that's when the eviction moratoriums are going to go away. That's when the forbearance programs are going to stop. And now if people don't have money coming in, that's when we're going to really feel the pain of this recession. If that happens and people still don't have jobs, now you're going to see foreclosures go up, you're going to see evictions go up, and you're going to see us go into a deeper recession. That's why you want to take steps to protect yourself and your family's finances right now. That way you're not surprised if things get worse. If you do that and then the economy starts booming, well, then you can be mad at me for having a big bank account. I'll be okay with that. But I don't just want you to survive this financial recession. I want you to thrive through it, because the reality is recessions and economic crashes create big opportunities for people who know how to think different. I'm going to be talking more about that and how you can do that in just a second. But if you do want to learn more about money management and investing, we have a free ebook on money management and investing that you can read for free when you sign up for our financial education emails, which are also free. You can get a free ebook and start reading our financial education emails by clicking the link up here or by clicking the link in the description below. By the way, our financial education emails are separate from our financial news emails. You've probably heard the Warren Buffett saying, be fearful when others are greedy, be greedy when others are fearful. When you are in a recession or an economic crash, people are fearful. It's natural because we don't know what's going to come in the economy. What you want to be doing in this situation is rethink how you use your money, because you want to use it as an opportunity to buy assets or investments when they're on sale. An asset is something that puts money in your pocket, like an investment, and a liability is something that takes money away from your pockets. Liabilities go on sale all the time. Prime Day, Black Friday. These are opportunities for people to go and empty their bank accounts to their favorite businesses. Recessions and economic crashes are when assets go on sale, and that's when I want you to come in and buy assets at a discounted price. We already saw this happen in the stock market in March when the stock market started nosediving. If this pandemic gets worse or our economy gets worse, we could see asset prices come down again. But not all assets work the same. I mean, the stock market is different than real estate, is different than gold, is different than crypto. And let's talk about all four of these. The stock market is the place where people go and they buy shares of companies based on what they think is going to happen in the economy in the future. Like if I think the economy is going to start booming and people are going to have more money, so they're going to be more likely to buy extra guac at Chipotle, then I might be interested in buying shares or ownership of the Chipotle stock. But if this economy gets worse and then people start to get more worried about the future of our economy, you could see more people start selling their stocks, which would drive asset prices lower. This could create an opportunity for you to come in and buy, but understand that investing has risks. You are never guaranteed to make money when you invest. You might even lose money, so always do your own due diligence and never blindly listen to a random guy on YouTube. If you do that, don't try to perfectly time the market. When the March stock market crash happened, so many people missed the opportunity to buy stocks on sale because they kept saying, you know what, I'm going to wait until the stock market crashes even more before I buy. Next thing you knew, the stock market shot back up. One of the simplest things that you can do is come up with a strategy beforehand. That way you're ready for anything. Like you can come up with a list of 5 stocks or funds that you want to own. So do your research, figure out which stocks or funds you want to own, and then make a rule for yourself. Like if any of these stocks or funds drop by 10%, then that's when you're going to come in and start buying. And anytime they fall more than another 5% or another 10%, that's when you buy more. Now you're not making decisions on the fly and you're not going to be driven by emotion. You have a strategy in place and you just have to stick with it. By the way, if you do want to invest in stocks, you have to use a free stock brokerage like our sponsor Webull. Webull is a free app and they don't charge you a penny to make a trade because they are a commission-free brokerage. And the best part is that Webull is giving you, Minority Mindset fans, a free stock valued at up to $1,600 when you deposit $100 in your account. So if you want to learn more, get your free stock and start investing, I got the link to how you can do that with Webull in the description below. Minority Mindset is a paid partner with Webull. So if you use them, we will get compensated, but there's no additional cost to you. So if you want to learn more, start investing, and see how you can get your free stock, I got the link to how you can do that in the description below. With real estate, the game is a little bit different because now you're buying assets, real estate, so you can create passive income through rent. To really make this profitable, you need to be buying real estate at below market value prices, which means on sale. Real estate prices don't move as fast as the stock market because on the stock market, you have stocks trading every single second. With real estate, it can take a year for a real estate transaction to happen. So real estate prices move a whole lot slower. But things you want to pay attention to understand if real estate prices are going to go up or down is, one, to understand the demand for homes. Because if you want real estate prices to go down, you need real estate demand to go down, and you also need supply of homes to go up. The thing you want to pay attention to right now are home prices. Because if home prices keep shooting up the way they are right now, eventually you're going to get to the point where people can't afford to buy a home. And if the mortgage forbearance program ends and people still don't have money coming in because they don't have jobs, then you're going to see an uptick of foreclosures. And if that happens, this can now push real estate prices lower. Again, these are all just big ifs. I don't know which way this is going to go, but these are things you want to pay attention to. Gold and cryptocurrency work pretty similarly because people buy gold and cryptocurrency as kind of like protection or a hedge to protect the value of their money. To understand these assets, you want to pay attention to stimulus measures, bailouts, and government debt. Essentially, as more money is printed, the value of our dollars go down, which makes owning these assets, gold and cryptocurrency, more attractive, which pushes the prices of these assets up. Plus, now we're seeing things like PayPal allowing people to use cryptocurrency on their platforms. So while there's a lot of uncertainty ahead in the markets, I don't want you to use this as an opportunity to be scared. I want you to use this as an opportunity to be prepared, and as a financially savvy investor, I want you to use it as an opportunity to take advantage of what's going on. That way you can come out of this mess a financial winner. I'm going to do whatever I can to keep you updated on our YouTube channel, so if you haven't subscribed yet, make sure you do that. And we have some more resources for you, like an ebook in the description below. Thank you for watching. If you enjoyed this video, share it with one friend, that way we can help spread the word. If you want to learn more about what's really going on in the housing market and if we could see a housing market crash, I already made a video on this and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.